Welcome to this Money IQ help video. This is on the dividend tax changes for 2016. Basically, what do I need to know? If you run a limited company and it is principally yourself, classic situations would be you are a contractor and the organization to which you contract requires you to have a limited company. You invoice your customer from the limited company and you extract a salary and pay yourself dividends from your limited company. So what do you need to know about the tax changes that are coming for 2016? Well, there is a very helpful dividend allowance fact sheet on the internet. Just Google it, dividend allowance fact sheet, you'll find this thing. But I just wanted to run through a bit of the things that are going on. So from April 2016, it's actually the tax credit is going to be replaced by a new allowance. So this dividend allowance means on the first 5,000 of your dividend income, no matter what dividend income you have, it will be at a rate of 0%. So this allowance is available to anyone who has dividend income. Of course, the difference with 2016 is above 5,000, you're going to pay tax at 7.5% of income within your basic rate band, 32.5% if you're in a higher rate, or if you're above that in the additional rate band, then the rate is 38.1. Now, of course, the government are saying that this is a simpler system, and to many it is actually a little bit easier. But if you're an investor with a modest income in shares, you'll either see a tax cut or no change in the amount of tax you owe. But this really applies for small companies and is a way of actually catching up on the way that dividends were used as a way of paying people avoiding the payment of national insurance. So all this is great stuff, but what does it actually mean? So the way it will actually work is illustrated by these examples. So the allowance, the personal allowance in 2016-17 is £11,000, and the basic rate limit after that is 32,000, and the higher rate threshold is 43. So let's have a little look. I receive less than £5,000 a year in dividends. So from April 2016, you won't have to pay tax on your dividend income as it's within that new dividend allowance. Okay, example 2. I receive £600 from shares invested in an ISA. Well, ISAs are tax-free, so you don't have to pay anything. Right, example number 3. I have non-dividend income, I think that's a euphemism for pay, of £6,500, and I receive £12,000 from shares outside of an ISA. So here we go. With a personal allowance of £11,000, £4,500 of the dividends are under the threshold for tax, because you already earn £6,500. You've got a personal allowance of £11,000, so the difference is £4,500. So you've got £12,000. So a further £5,000 comes from the dividend allowance. So you've got £4,500 plus that £5,000 of the dividend allowance, leaving the tax to pay at the basic rate 7.5% on the balance left, which is £2,500. Example 4. I have pay or non-dividend income of £20,000 and receive £6,000 not in an ISA, so dividends not in an ISA. So you don't need to pay tax on the first 5,000 of dividends because of the dividend allowance, but you will pay on 1,000 at 7.5%. Example 5. I have a non-dividend income of £18,000 and I receive dividends of £22,000 outside of an ISA. So here we go. On the £18,000 non-dividend income, you've got £11,000 covered by the personal allowance. So therefore 18 minus 11 is £7,000 to be taxed at the basic rate. Now looking at the dividend income, you've got £22,000 of that. Again, the first £5,000 is tax-free, and then the rest, 22,000 minus 5 is 17,000, and that 17,000 will be taxed at the basic rate. Now, here it gets a little bit complicated, because this is where example 6 moves up a band into higher rate tax. So I have non-dividend income of 40,000, so salary if you like, and I receive dividends of £9,000 outside of an ISA. So of the £40,000 non-dividend income, of course 11,000 is covered by the personal allowance, leaving 29,000 to be taxed at basic rate. Now this leaves £3,000 of income that can be earned within the basic rate limit before the higher rate threshold is crossed. So now the dividend allowance covers this £3,000 first, and the rest, i.e. 5,000 minus that 3,000, gives £2,000 of allowance that can be used inside the higher rate band. That then gobbles up all the £5,000 dividend income, and therefore it's not covered by the allowance and it's not subject to tax. But you've got £9,000, so £9,000 minus £5,000 gives the remaining £4,000, and that is taxed at your higher rate, because the combination of the dividend income and your non-dividend income has taken you into that higher rate. So I hope that gives a basic overview of what's actually happening in 2016. Obviously, if you want a little bit more help or what have you, then by all means get in touch with Money IQ. We're here to help, here to make it a bit easy for you. And if you've got questions, then by all means get in touch and we'll do our best to help.